discussing journal entries. So the process of recording transactions in the journal, this is called journalizing. So there are 3 steps we need to follow in journalizing. The first step is identify the accounts that are affected and the type of accounts that are affected. So remember, in our earlier discussion, at least 2 accounts are affected, but there could be more. So when you're looking through these transactions, make sure that you are identifying every account that is affected and what type of account that is. And then you can determine whether each account is increased or decreased by using the rules of debits and credits that we talked about in the previous video. And the last step is to record the transaction in the journal, including a brief explanation. And after step 2, you would determine whether it's going to be a debit or a credit in the journal, and then you would record it. So let's look at the general format of a journal entry. So I've laid out the parts here. The first part of a journal entry is the date of the transaction. So I don't really have a date, so I'm going to use just X's to determine or to signify day and year, or day and month, depending on your journal. The second part of the journal entry is where we list the account names and the explanation in that column. So we always list the debited account name first. Now remember, assets is not an account, that is a category. So when we say account name, we mean cash, or accounts payable, or accounts receivable, whatever account is being debited. And also recall from our rules that a debit can make some accounts increase and a debit can make some accounts decrease. So that's the point of those first 3 steps that we talked about earlier. And then you would list the debited amount, the dollar amount. The second part of the journal entry, remember there's always a debit and always a credit because we want our debits to equal our credits. We list our credited account name. And notice that I've indented it just a little bit here. The credited account name is always indented on that second line, as well as the dollar amount is always indented as well. So this being said here, if we had had a compound entry, meaning there's more than one debit and or more than one credit, we always list all the debits first, and then we list our credits. And then the last thing you would find on your journal entry is, of course, the explanation. So let's look at some examples of journalizing. So here we have Cougar Cookie Company received $30,000 cash and issued common stock. So how would we go about journalizing this entry? So remember, the first thing you have in your entry is the date. And then we want to list our debited account first. So if we're thinking about we received $30,000 cash, that means we got cash. So cash is one of the accounts that's affected. And if we're receiving cash, we have to think, well, is cash going up or is cash going down? If we're receiving it, it's going up. Then we have to apply our rules of debits and credits. So if cash goes up, our rule tells us that cash goes up with a debit because cash is an asset. So cash will be listed first because that's our debited account, and of course the dollar amount. And then we have to find the other accounts that are affected. In this case, there's only one, and it's common stock. The transaction says that we issued stock. So common stock is actually going up. And our rules of debits and credits say that common stock increases with a credit. So now we have to remember that we indent our credit slightly, the account name, and the dollar amount. And then you would actually put a little explanation underneath this journal entry, and it can be something very simple, like issued stock for cash. That would be an explanation for this journal entry, something very simple. And our second entry that I have here Cougar Cookie Company paid dividends of $10,000. So again, the first step is to determine the accounts that are affected. So it says that we paid dividends. So we know that dividends is one of the accounts that's affected. And we paid $10,000. So that means cash is affected. If we're paying out cash, that means cash is going down. I often find that new learners of accounting find it most easy to figure out what's going on with cash first. If cash is affected, is it going up or going down? Then you can determine if it's a debit or credit, and if you can't remember how the other account is affected, it's by process of elimination at that point. And sometimes that helps in the beginning. So again, the first part of our journal entry is, of course, the date. And we list our debited account first. So let's go back to the transaction. I paid dividends of $10,000. That means my dividends are going up, my cash is going down. So dividends go up with debits. So dividends is getting debited here for $10,000, and it says that I'm paying $10,000 cash. So cash is going down because I'm paying it. It's going out. And cash is an asset, and assets decrease with credits, so we would credit cash for $10,000. Again, note that I'm indenting the credited account and the credited amount. So now we've done the journal entries. So let's go back to a prior video where we actually had the T accounts, and we're going to post this information. So when we move information from the journal to the ledger, and the ledger is where the T accounts are housed, that is called posting. So here are the two transactions that we just journalized, and I want to post these into the proper accounts. So cash, again, is an asset. So we debited cash in this first entry, so I'm going to put it on the debit side of the cash T account. Posting is the easy part. You've already done the hard part when you journalized, which is the first step. The second step is posting. If it's a debit in the journal, it's going to be a debit in the ledger, so don't change anything around. So again, the first entry here, we debited cash for $30,000. We credited common stock for $30,000. So I'm just going to move it from the journal to the ledger. $30,000 credit to common stock. The second journal entry, I had a $10,000 debit to dividends. I'm just going to simply move it to the ledger, the T account. And I had a credit to cash of $10,000. I'm going to move it down to that T account. Now some of you may be thinking, well, why do I need this information in two different places? Well, think about your cash account. If you're keeping the books and you've got the cash and you've got 1,000 transactions in your cash account, in your journal, let's say you've just got this journal, so you've got 1,000 of these transactions. Some of them affect cash, some of them don't. And your boss comes to you and says, "What's the balance in my cash account?" You're probably not going to want to go through every single journal entry that you've made and add up all the debits to cash and subtract all the credits to cash and give your boss an answer 3 hours later. If you have posted these journal entries into the T account appropriately, as soon as you're asked, you could go to the T account and the balance would be there. So here our balance in our cash account is a debit balance of $20,000. Notice it's a debit balance because my debits of $30,000 are higher than my credits of $10,000, leaving me a balance on the debit side of $20,000, which is good from our prior lecture because we know that cash should have a normal debit balance. Dividends only had one posting of $10,000 to the debit side, therefore it would still have a debit balance of $10,000. Remember the idea with T accounts, we're not trying to make the T account balance. We're just trying to get a balance in that account, not make it balance. And then, of course, we only had one entry to common stock, a credit of $30,000. Now, also remember, after you've posted all of these transactions to the ledger, you want to ensure that debits equal the credits. So let's make sure of this now. Cash had a debit balance of $20,000. Dividends has a debit balance of $10,000 for a total of $30,000 debit balances. Common stock has a credit balance of $30,000. Therefore, our debits do equal our credits.